How are you, fellow traders? Today I have this account for synthetic indices. It was quite a long time without posting any video here, but many people are coming to my inbox and I find it necessary to do this video for you. I want to show you the assets that we have on indices. If we click this plus sign here, we can add some of the assets which are not on this list. So we simply click and we can check the volatility indices folder and you click them for them to go to the list. And I can move to the crash and boom, and I can move to the range break, I can move to the jump indices, so that I can have them all on the list. So our list is very long. We have the step index, the booms, the crashes, the volatilities, 10, 25, 50, 75, 100, 75, 1S, 10, 25, 50, 1S, 100, 1S, volatility 200. These are the new ones. Volatility 200, 1S, volatility 300, 1S, crash, boom index, boom 300 index, range break, jump. We have a lot of them. So for you to be successful, you don't need to trade all these assets. Your assets that you are supposed to trade must be governed by the equity and the balance. So the equity or the balance is supposed to guide you on which assets to trade. Most of the people, they just get into the booms and the crashes. Sometimes they get the profits, but to my side, I don't take those, the booms and the crashes. For the volatility 10 index, it needs also better capital. The V or the volatility 50 index, they need better capital. Whereas still, when you have smallest accounts which are less than $50 or $100, don't go for volatility 100 index. This can destroy your account within some seconds. This volatility 100 index, this is dangerous. But if you have big accounts, $100, $500, $1,000, you can go for this volatility 100 index. It can give you, if you analyze and get it correct, you can get more profit. You can get more profit because this one is a cash cow and it's also an undertaker. You can be destroyed within some seconds because in volatility, when you try by all means to be fast, you crash. Like the booms and the crashes, you crash or you fall because these things, they are already in a fast mode. So if you want to be fast, it means you want to increase the speed of these things. So you need to take your heart, sit down and relax. Watch for quite a long time. Where is this thing going? Which one is the best trend for this thing? And you can see. And one thing for sure, whenever you place any index, it always go against you. That is 99.99%. It always go against you. So if you have smallest capital, it can just go the opposite direction and destroy your account, and it starts to go in the direction of your analysis. Like if you place a sell, it go to buy for quite some seconds, looking for your margin call out area. And if you have $3 or $10 or $14 like my account, then you destroy that account. After your account is destroyed, it starts to go down. And you may think that there is someone who is controlling that thing. No. Derivative is taking care of millions of these synthetic indices account. How can they have millions of managers? Yes, you have your account manager, But that account manager doesn't mean that he's always looking on your account. He is there for you, to help you, not to destroy your account. People are making money there and they are withdrawing their money. And some are losing and they call Deriv a scam. Deriv is not a scam. If you lose money, it doesn't mean that Deriv is a scam. When you talk of a scam, is something which is not able to explain where the money is. But if you deposit your money to Deriv and make profit, they can allow you to withdraw your capital and your profit. So it's not a scam. Money, there is no need for people to explain money. Money can just be given to the owner. But if you trade and lose, there is no need for you to come for compensation or to claim your money, because you signed the agreement. So before you enter any trade, you must sign the agreement in your mind that you want to grow that amount, or you are able to accept if you lose. People have a tendency of not accepting defeat. That is the main problem with the people. That's why most of the traders, they are becoming bitter nowadays. If they lose money, they stop trading. That is a sign of bitterness. Don't just jump. I think Deriv is doing good for us because they have a provision of demo accounts where you can trade and practice. Someone came to my inbox last week and he told me that what I'm seeing on a demo is different from real account. And I told him that, yes, you are talking about demo and you are also talking about real. Demo account is just a reflection of real account. What you see on real account is what you see on demo account. But don't expect them to be 100% similar. But the basics are the same. I don't know what was going on. Sometimes other brokers, if you check their demo accounts, if you check the quotes, those numbers, they look very different from the real account. But that does not wash away the fact that the demo account, the buy, the sell, and the direction of movement is the same, even though the figures are different. So there is no problem there. So what I encourage I encourage you to trade when you have these smaller accounts, $50 below, $50 and below. I can encourage you to trade volatility 75 index, volatility 75 1S, volatility 25. Those are better for you. And you are supposed to leave all other indices. The benefit of trading even one index is that you can master that index. You can master its behavior. So now I just want to go for volatility 75 index. I like this one because previously it was used to be very vicious, the way we are seeing the V100. So before I place any trade, I can go to the chart and I can see this one is going down, and I use M30, I go to H1 and I can see the same, and I can go to H4 and I can see the same. Then I can safely place buy. Watch out for these lot sizes, because before this trade I was trading volatility 75 1S, and the minimum lot size is 0.005. So if you just simply go and jump, last week I lost $40 because of that. I was trading V50 with a minimum lot size of 0.5, and then I moved on to another index with a minimum lot size of 0.2. But the lot size that I used was very, very big, and I was shocked to see the negative starting at -18, and that was very strange. And then I found that I did not change the lot size. So before you place the trade, check your index, the minimum lot for that index, and then adjust the lot. This is the area where we adjust our lot size, this one, and this is the minimum for volatility 75 1S. Because if you place using bigger lot size, then you are good to go. And someone came to my inbox also, and he said, always if I place my trades, it start in red. Yes, don't expect your trades to just go to the blue. They can go to red, they're going to go to blue. But what is required for you to do is just to have patience. Wait for the trade to go to blue, because if you go to red and you close, go to red and close, go to red and close, you keep on closing and losing your capital. So what you need is just good analysis. I don't know other people who say we are account managers. They take accounts like $100 from their clients or $500 from their clients. Out of that $500, they rarely close even a single trade in blue. I don't know the reason behind that. It is very easy for someone to have a trade in blue. Very, very easy. But they close all the trades in red. If they close 10 or 100% of those trades, they closed in red. That is very strange. I don't know how they manage to do that. I don't know. Because I heard some of these account managers, they can take two accounts and they simply place a buy on another account and a sell on another account without analyzing. So you are risking your money when you are giving these accounts to your account managers. Yes, we have got various forex academies in the world, but I don't know if they really know what they do. What you need to know is just the basics of forex, and from there you are supposed to develop yourself using demo account. You can develop your own strategies, because most of the people, they are selling strategies, they are selling whatever what they call them online, but those things, they are not making people successful. The rate at which people are losing money is very high, because people, they don't trust themselves. If you trust yourself, if you have confidence in yourself, then you are good to go. Trust yourself first, have confidence, and then trade. Trade your own capital. You are the best trader. What you need is just good capital. People have got good capital, but they want to start trading, testing the market with $5. You are giving yourself bad experience. Because if you lose that $5, you can then say, if it was 500, if it was 5,000, so does it mean that I was supposed to lose it this way? No, it's different. The lower the capital, the higher the risk of losing the whole capital. The bigger the capital, the higher the chances of getting profit. Any account can give you profit. You can see that this one, it went to $1 and I'm still holding it without any fear. What you need is just to analyze correctly. I'm not in a hurry, because I know I analyzed this trade, and this trade is going to give me profit which is more than $1. So I just need $1.20, because bread in our country is going for $1.20, and that $1.20 is good for my family, because I'm going to buy bread using that $1.20 from these $14. If I need something to add on for my breakfast, I can simply trade. So you can make your family live better life if you don't target very bigger profits. Most of the people, they double these accounts, of which we say you are supposed to have only 10% of the capital. Meaning to say all these 34 cents is good for this account. This is very, very smaller account. But someone can give himself or herself target to go to $1,000 from $10. That target itself is good to destroy your account. So what you need is just to give yourself very smaller target, so that you leave trading whilst you are concentrating well. Don't keep on donating the funds. One of the days, try to withdraw your money and then show it to your family, so that they appreciate what you are doing. Not just keep on adding funds without withdrawing. Some can add funds like $100 and they can go to $1,000. They keep on trading without removing the first $100. If you make bigger profits, then remove the capital, put it back to where you, or to the source of that money, and then start to trade using profits. That can also increase your confidence and reduce fear, because you will be aware that I'm using these funds which does not belong to me, even though it's my profit. But my money or my capital is no longer in this account. So you can safely trade without any fear. That element of fear can also disturb your analysis. That's why you see most of the people, they make profit on demo account and they rarely make profit on real account. Because people, they have patience on demo account and they don't have patience on real account. People, they have patience on red or trades in loss, and they don't have patience in trades in blue. Someone can keep this account in negative and it can go to $14. But I'm not able to keep this trade in blue until it reaches $14. After some few cents, I can close the trade. But when it is negative, I can leave the trade. That is poor risk or loss management. You must say, for this $14, if I go to loss, I just want to lose $5 or $4. So if it go to minus $4, you can close the trade and go back to the analysis chart, analyze again, or you need to wait and see what it wants to do, or the movement of its direction, and then you place another trade. You can see now it is in red, but this does not mean that I'm going to close this trade. I will leave it because it moves in both directions. It went to $1 and I did not close the trade. Now it's to minus $1. I'm not going to close the trade again. So this was just for education purpose, to show you that the trades can go either directions, to the blue side and to the red side. So don't lose heart. Let us deposit bigger amounts and then trade. Do not increase the capital and increase the lot size at the same time. You are not doing it good. If you increase capital, your lot size must remain at the minimum. These are called synthetic indices. Formerly, they were known as volatility indices. Something which is volatile is something which is moving faster. So that minimum lot size is good for you to make profit. Do not pile trades. People can go to the chart, as you can see this one, and they can open another sale, open another sale, open another sale. Just leave that one trade. Do not keep on opening trades to counter the trade. That is known as revenge trading. Revenge trading is dangerous. With this only one trade and on this account, I am very, very safe. But if I add 2 more or 3 more, then my account is in danger. Instead of moving in a single step, when it moves with only one step, that step will be multiplied by the number of open trades. Meaning to say, if I have 5 trades, we were supposed to see more than minus $6 there. Meaning to say almost half of my capital is gone. But now the percentage of the capital which is occupied by this negative is very, very small. And then I am going to leave this trade because I know that it is going to be in blue. And I'm going to get more than $1 from this trade. Thank you very much. When you are first-time viewers, don't forget to subscribe to this YouTube channel, to this Facebook page, to all my pages, because I always upload these videos on various platforms. Make sure you follow the platforms, you subscribe to these platforms, and then you share the videos. If you have any comment, I always place my number. You are able to comment even under the video, or you can come to my WhatsApp inbox and we can discuss. For those without these indices account, you can simply come to my inbox, or you can go to the description section of this video and then click the link and open your account. Thank you very much. Good time, good day, goodbye.